Good afternoon, everyone. Welcome to our webinar where we'll be discussing the importance of beneficiaries and estate planning. We'll give everyone a few moments to join the webinar and we'll commence shortly. Okay, so my name's Janine and my role at Brighter Super is a member account manager. We meet with members on a regular basis, and part of our discussion is the importance of understanding the options for nominating a beneficiary in your accumulation and pension account. It's one of our popular topics at our seminars, and we hope at the end of this session you will have gained a further understanding of beneficiaries and estate planning. Firstly, Brighter Super acknowledges the traditional owners of the lands on which we are meeting and pay our respects to our elders, past, present, and emerging. We acknowledge and celebrate the continuation of a living culture that has a unique role in this region. It's important to understand that the information and examples contained in the presentation are general in nature and have been prepared without taking into account your individual objectives, financial situation, or needs. It's important when making decisions about your super options that you obtain the relevant product disclosure statement and target market determination and consider your own personal circumstances. You can access these documents and the Financial Services Guide from the Brighter Super website. Today's presentation will run for about 30 minutes, and many of you have submitted questions already, which is great. So we've tried to incorporate those into the presentation. You can also post questions in the Q&A feature during our presentation today, which we'll aim to answer directly. And today we also have Michelle standing by as our moderator. So Michelle's been in the industry for 24 years, which is amazing, great asset to us. She's regularly out in the field providing super health checks to our members in different regions all across Queensland.
Hi folks, thanks for joining us and thanks Janine. I look forward to answering all your questions that you may have in the chat. And just a reminder, just pop those in the Q&A feature on your screen at any point and I'll try and get to those for you. Thank you.
Thanks, Michelle. So we should have time for those questions at the end. We'll try to answer as many as possible, as Michelle said. We'll also be running some poll questions throughout today's presentation. So when the question pops up on your screen, please just click an answer that's most appropriate for you. Don't worry about taking too many notes because we will be sending this recording through in the coming days. Before we move on to our main subject, I'd like to take the opportunity to briefly explain who we are, as we have some non-members that are joining us today. The merger between LGIA Super and Energy Super puts the acquisition of Suncorp Suncorp Super, has enabled us to increase our size and scale, yet we remain committed to investing in the personalised member services that you all know and enjoy. We serve over 285,000 members, with more than 34 billion in funds under management, and we receive double-digit returns for the balanced accumulation and balanced pension options in the 23-24 financial year. Now let's talk beneficiaries. So what's estate planning? An estate plan aims to preserve the maximum amount of wealth possible for the intended beneficiaries and ensure an individual's personal wishes are respected upon passing. This allows you to be in control of how you would like your estate distributed. An estate plan helps you protect your family and loved ones, optimise tax upon transfer of assets in a legal and logical manner, and ensure your wishes are followed. Remember that your estate typically consists of everything you own, which are your assets, and everything you owe, which are your liabilities. Superannuation can be one of those assets. It is important to know it doesn't automatically form part of your asset of your estate because super is held within a trust managed by the trustee of your super fund. So what's a death benefit? A death benefit is generally the amount of money in your super account plus any insurance you may have at the time of your death. You can find your death benefit amount in your annual benefit statement, which is available online. It's important to note that a superannuation death benefit does not automatically form part of a member's estate and is not necessarily paid as part of the will. If there is no valid binding death benefit nomination on the account, then Brighter Super will determine the distribution of the benefit, subject to the requirements of our trustees, governing rules, and legislative requirements. So generally speaking, that may be the member's dependents or legal personal representative of the state. In allocating a superannuation death benefit among the member's dependents, consideration is given to those dependents who might reasonably expect to receive a benefit. And dependents are generally spouse, child, financial dependent, or someone you share an interdependent relationship with. We will discuss these dependents in further detail later in the presentation. As mentioned, superannuation does not automatically form part of the estate. Brighter Super would generally only pay to the estate if none of the above existed. So where there is no dependent, no valid nomination, Brighter Super would generally pay a death benefit in accordance with the Superannuation Industry Supervision Act 1993. This is also known as SIS regulations and also with the fund's trust deed. We've recently made improvements to the way death benefits are paid by amending our trust deed to provide clearer guidance and to speed up decision making in cases where we do not hold a valid beneficiary nomination. This will help to expedite claims, decisions, and minimise delays. Interestingly, did you know that it can take up to 3 times longer to pay out a death benefit if you do not have a binding death benefit nomination in place? You can also review your current nomination by logging onto your member online account, where there is a section on the left called Beneficiaries, which shows your current beneficiary nomination. It's important to review this regularly to ensure it's up to date and valid. It's especially important to review this if you've had a change in personal circumstances, for example, marriage or relationship breakdown. Your current beneficiary nomination will also be detailed in your annual benefit statement each year. On this slide, we're going to discuss a binding nomination. A valid binding nomination directs Brighter Super to pay your death benefit to your nominated beneficiary or beneficiaries. A recent improvement is you can now complete a binding, non-lapsing nomination online. This is a feature the members love, I have to say. A non-lapsing option means you do not need to renew the nomination every 3 years. A non-lapsing binding nomination does not expire. However, its validity will be assessed at the time of your death. We will cover this in more detail on the next slide. You can change or revoke your nomination at any time. Making a binding nomination puts you in control. If you have more than one beneficiary, you can decide what percentage of the benefit each beneficiary would receive. For example, your partner could receive 50% and your 2 children could receive 25% each. A binding death benefit nomination gives you certainty over where your funds will go. Okay, now on to our first poll question for today. Have you nominated a beneficiary? Oh, great to see that the majority of you have, because as you can see, it's very important. So we have, yeah, definitely the majority, over 80%. So thank you. You may have noticed I've mentioned a few times that your nomination must be valid at the time of your death. Let's have a look at who you can nominate as a beneficiary. Superannuation legislation dictates the following can receive all or part of a superannuation death benefit: the member's dependents and the member's legal representative, also known as LPR. Under superannuation law, a dependent may include a spouse, whether legal or de facto, a child, including an adopted child, an ex-nuptial child, a stepchild, and anyone who fits the definition of a child under the Family Law Act 1975. Any person who's in an interdependent relationship with a deceased member, and any person who was financially dependent on the deceased member. An LPR is the executor named in your will or the administrator of your estate. So if you nominate your LPR to receive your super benefit, Brighter Super will send the funds to your estate and the LPR will distribute the super benefit according to your will. I think it is fairly clear what the definition is for a spouse or child. Let's delve a little deeper into who's considered a financial dependent and what is the definition of an interdependent relationship. Okay, let's begin with a financial dependent. A financial dependent is someone who's financially dependent on the member at the time of their death. This may include being reliant on the deceased for the payment of bills, rent, or shared financial commitments, such as a mortgage. Documents proving the financial dependency would need to be provided to Brighter Super at the time of claim. What's an interdependent relationship? Two people are in an interdependent relationship if they have a close personal relationship, they live together, and one or each of them provides the other with financial support, and one or each of them provides the other with domestic support and personal care. It's important to realise that in order to satisfy the criteria for interdependency, all 4 criteria must be met. An example of this type of relationship would be, say, an elderly brother and sister who live together and support one another in all areas listed above. If 2 individuals share a close personal relationship but don't fulfill the above due to one or both having a physical, intellectual, or psychiatric disability, they are still recognised as being in an interdependent relationship. If 2 individuals share a close personal relationship but don't fulfill the above due to one or both having a physical, intellectual, or psychiatric disability, they're still recognised as being in an interdependent relationship. So what happens if you don't nominate a beneficiary? If there is no valid binding death benefit nomination, then Brighter Super is legally required to determine the distribution of the benefit subject to the requirements of our governing rules and legislation. Death benefits are tax-free if paid to a tax dependent, and this includes a spouse, whether married or de facto, a child under the age of 18 years, including stepchildren, adopted children, ex-nuptial children, or anyone who fits the definition of a child under the Family Law Act of 1975. Anyone who was financially dependent on you at the time of your death, a person who you shared an interdependent relationship with. Now that we know who's a tax dependent, it's important to review any potential tax payable on a death benefit. And a common question we get is my death benefit taxed before it's paid to someone? And the answer is it depends on who it's paid to. As discussed on a previous slide, if the death benefit is paid to a tax dependent, it's generally paid tax-free. But it can come as a surprise to some people if it is paid to someone who is not a tax dependent, for example, an adult child who's not financially dependent. It may be taxed at up to 17%. In most people's balances, there are two components. There's a tax-free component and a taxable component. The tax-free component are funds that were contributed as an after-tax or non-concessional contribution. These contributions aren't taxed coming into super as they have already been taxed. An example is if you received an inheritance or sale of an asset and put the money into super. The tax-free component of your account is paid tax-free to anyone, regardless if they are a tax dependent. However, most people's super is made up of a taxable component. The taxable component is made up of employer contributions, salary sacrifice contributions, and tax-deductible contributions, as well as investment earnings. These funds have been taxed at 15% on the way into your super, which is a concessional tax rate. Essentially, the government is giving you a tax break to help you build your super for your retirement, not as an estate planning tool. So if the benefit is paid to someone who is not considered a tax dependent, the government comes knocking for the tax that you didn't pay when you were contributing those concessional contributions into your super. And this may be up to 17%. The taxed and tax-free components are calculated at the time of payment. The great news for you is that there are potential strategies that our financial team are able to help you with as part of retirement planning advice, including to reduce the benefit tax. Let me give you a simple example of the potential tax payable for a non-tax dependent. On passing, Jamie has a total balance of $500,000. And he wanted to leave this to their adult child. This is made up of the taxable component of $400,000. The potential tax payable on this amount is $17,000, which equals $68,000. This will be deducted and paid to the ATO prior to Jamie's adult child receiving the death benefit. The remaining $100,000 is tax-free component and would pass in its entirety to Jamie's child. The total benefit Jamie's child would receive after tax is $432,000. You can see the potential tax on death benefits can be a substantial amount. I encourage you to find your individual taxable components on Member Online through the Benefit Quote tab. And as I mentioned on the previous slide, if you're concerned about your tax position, there are potential strategies for reducing tax on death that our financial advice team can discuss with you. I would definitely suggest seeking advice for your own personal circumstances if you feel these strategies may be of benefit to you. Later in the presentation, we will share how you can contact them. Now, on to our second poll. When did you last check your beneficiary nomination? To see there's not too many that are saying never. So the majority of people are within the last 3 years, which is great, but always a good idea, as we said, to check that, see if it's up to date. Okay. There are different types of death benefit nominations. Today we're focusing on binding nominations and reversionary nominations. The following slides will go through the types of nominations that bind the trustee. We mentioned earlier that you can now nominate a binding non-lapsing nomination online. This also includes nominating your LPR. Should you prefer to use the physical form, this is available on our website to download. But we have had some feedback about the ease of doing it online. It's important to note that if you are nominating more than one beneficiary, then the total of all shares allocated to each beneficiary must equal 100%. Please remember to review or update your nomination whenever your situation changes. The other option is a reversionary nomination. Reversionary nominations only apply to members with a pension account. This nomination can be done via a physical form or when applying for a pension account through Member Online. A reversionary beneficiary nomination allows you to have your pension continue to be paid as a pension to your beneficiary, generally your spouse, upon your death. Generally, it allows us to keep the funds in the pension account and just change the name of the account to the beneficiary. This means that they can also make a lump sum withdrawal or change the payments as needed. There may be social security or tax implications for your potential beneficiaries when making a reversionary nomination. I would recommend, if someone becomes a reversionary beneficiary, to seek financial advice from a brighter super advisor. They can help smooth out what might be quite a difficult time. A reversionary nomination is legally binding and does not lapse. And we recommend reviewing your reversionary nomination regularly to ensure that it's still appropriate for your situation. Who you can nominate as a reversionary beneficiary is outlined in the form. This is generally your spouse, although there is an option for children. However, this is age, financial, or disability dependent. Please refer to the form for all the relevant options. You can also refer to the Brighter Super Pension PDS for further guidance. Now that we've covered the different types of nominations, now's a good opportunity to ask another poll question. Do you intend to review your beneficiary nominations after this presentation? Oh, closer, the two answers this time. It's probably because lots of people have already had a look at theirs recently, but that's good to see that people are up to date reviewing it. Okay. Apart from seeking financial advice, we would also suggest you seek independent estate planning from planning advice. Loan Chow from YHC Lawyers often presents at our face-to-face seminars, so some of you may have seen her, where she speaks about the importance of wills and estate planning and enduring powers of attorney. YHC Lawyers details are on the screen, and if you're interested in speaking about your situation, you can just merely scan the QR code for further contact information. Just leave that there for a couple of seconds. So what makes Brighter Super different to other superannuation funds? It's our commitment to personal service. We have a dedicated team of member account specialists here to support you. If you'd like to speak to one of our staff on one of the top more general information about your superannuation, why not book in for a super health check? A super health check covers a variety of areas and includes reviewing your beneficiary nomination. If you would like to book now, there is a QR code on the screen. You will also receive a link to book a super health check in the coming days alongside today's webinar recording. So keep an eye out for that. Our team services members all over Queensland with face-to-face services and also digital channels if you prefer, so you can get some general guidance on a range of superannuation topics no matter where you live or work. We offer a range of personal advice options suited to individual member needs. If you're looking for specific information about making contributions or investment strategies, our intra-fund advice team can help. Book in over the phone meeting with a financial advisor. It's at no extra cost. Two of the most common questions members ask as they approach retirement are, how much do I need to retire? Do I have enough super? A retirement health check with one of our financial advisors will help you answer these questions. We also offer both a scaled and comprehensive personal advice service. So this service takes a complete view of your financial situation to tailor advice to suit your individual needs, is a face-to-face meeting with one of our advice team in Brisbane and various regions across Queensland. And appointments may also be arranged via digital channels. Similar to today's Beneficiaries webinar, our seminar webpage also includes a range of upcoming webinar topics. Keep an eye on this page as we update it regularly. On the previous two slides, we discussed our range of advice services. This range includes our super health checks and intra-fund advice, both of which are at no additional cost to our members to other types of advice, such as retirement health checks, scaled and compulsory advice, which are free fee for service. So please have a look into that. And now our next poll question is for you. After today's webinar, are you planning to get advice? Almost even split there. Thanks everyone for responding. Okay. Well, we've tried to answer questions throughout the webinar tonight, but I'm going to invite Michelle to come back onto the screen to ask any questions we couldn't get through the Q&A chat that maybe were lodged. During the Q&A, we will show the super health check slide again as well, and that will give you additional time should you wish to book in an appointment.
Okay, folks, thank you so much, Janine. Appreciate that. I've been busy answering a few questions in the background, and we did have a number of pre-submitted questions, which, funnily enough, you answered. So great job. I found it extremely interesting, all the different types of beneficiaries. You and I live and breathe this kind of work every day. So, but it can get a little bit confusing on who to put on that form and once you fill it out. So before, I've got a couple of outstanding questions, but before I start that, I'll just give another general advice warning. So it's important to understand that similar to the webinar itself, the information and examples that we give in the Q&A session are general in nature and have been prepared without taking into your individual objectives, financial situations, and needs. Okay, so let me just go back, everyone. I've got a couple of questions here, and you probably have covered off, but just to clarify one more time, does my beneficiary expire, Janine?
Thanks,
that one that was outstanding.
Yes, it can. If you have not chosen a non-lapsing binding nomination, they can expire. There's the binding one that lapses every 3 years. So if you want to set and forget, it's the non-lapsing binding one that you need to log.
And there was another pre-submitted questions. It's come up a number of times. I can see here just in regards to, and we'll just clarify again that tax strategies being put in place to minimise tax later down the track. Is that something that we can help with?
Yeah, definitely. Our financial advisors are the best people to assist with that because everyone's situation is different, as we've mentioned a few times throughout this. So I would highly recommend an appointment with a financial advisor to support through that.
Yeah, everyone is different. So yeah. Everything has been answered on the Q&A, so that's fantastic. We've got a few extra ones submitted, so I'll hand it back to you.
Awesome. Thanks, Michelle, and thanks everyone for submitting your questions. So thanks again for taking the time to come along and attend our webinar. The one last poll question before we bring things to a close is, overall, how satisfied were you with today's webinar? There's some options there, but thank you everyone for attending today. We really appreciate it. Take care. Bye.